This is Special Focus right here on Equity Access, your daily insight on stock market developments and on developments in the Zimbabwean economy. A beautiful evening it is to you. I'm Ibn Mabunda. Let's roll. On agenda tonight, government has set 29 April as the deadline for what has been called the 2019 Ease of Doing Business in Zimbabwe Reforms Project. The project is aimed at ensuring that economic development targets set in the government's Transitional Stabilization Program are achieved by creating a conducive environment for business in line with Vision 2030 for an upper middle class economy for Zimbabwe. The Deputy Chief Secretary to the President and Cabinet, Dr. Raindu Kule, said technical teams are already working on proposals to ensure removal of challenges and setting up companies with deadline for finalization of the project being April 29 this year. According to World Bank's Ease of Doing Business Index 2018 report, Zimbabwe is ranked 159 out of 190. The index measures interaction between government and business organizations. On the index, country rankings are determined by sorting aggregate scores in 10 indicators comprising procedures for construction permits, access to electricity, access to credit, taxation levels, labor market regulation, among others. These are of paramount importance as investors evaluate potential investment zones largely on the ease of doing business country ratings. A sneak peek at the stats. Zimbabwe's ranking improved to 155 in 2018 from 159 in 2017. Ease of doing business in Zimbabwe averaged 161.91 from 2008 until 2018, reaching an all-time high of 171 in 2011 and a record low of 153 in 2014. Juxtaposed to other countries, Mauritius is ranked 20 out of 190, Rwanda 29 out of 190. Our neighbors South Africa, Botswana and Zambia are ranked 82, 86 and 87 respectively. Can't help it, I'm a big fan of Rwanda. Rwanda is ranked 29 out of 190. Here is why. It takes just 6 hours to open a business online in Rwanda at zero cost. Zimbabwe, not so good. Can be anything between 2 to 4 weeks. In 2008, Rwandan government set up the Rwanda Development Board, RDB. The vision of the RDB was to increase exports, advocate for policy change, assess and develop the labor market, and increase Rwanda's GDP per capita from $720 to $1,200. At the recent World Economic Forum, Rwanda was used as a template for economic progress, with President Paul Kagame being commended by international investors for having transformed the Rwandan economic landscape over the past 10 years. On the Corruption Perceptions Index, which assesses level of corruption in a given economy and is published by Transparency International, Zim ranks 160 out of 180. Botswana, our neighbor to the north, our neighbor to the west, 34, and Rwanda again, 48 out of 180. Lessons from Rwanda call for the need to implement reforms so that the special economic zones can be set up to attract the much-needed investment to resuscitate the Zimbabwean economy. Meanwhile, Alrosa, the world's leading diamond producer by output with recent mining interests in Zimbabwe, says its January sales are down 44% year on year. Following a strong performance in December, the Russian miner says rough and polished diamond sales fell to $281 million in January, which is a 44% decrease on the same month in 2018. Russian diamond giant Alrosa alongside Chinese-owned Anjin are the two foreign companies recently chosen by the Zimbabwean government to partner the state diamond firms in exploring and mining diamonds. Alrosa started conducting geological exploration in Zimbabwe in 2013, but dropped the licenses it held in 2016 due to a reform of the country's diamond industry. Government is considering waiving a rule that has prevented foreign investors from holding controlling stakes in its diamond mines as it targets production of 12 million carats by 2023, up from 3.5 million carats last year. Last month, Alrosa CEO Sergey Ivanovich said miners seek to support Zimbabwe in development of its diamond mining industry, with its geologists and mining engineers from the miner set to arrive in the country in the next month. Despite the country's diamond riches, no major producers are operating here. Rio Tinto Group sold its stake in a project in 2015 and Gem Diamond to Beers quit the country more than a decade ago. Zimbabwe's diamond production has tumbled in recent years as easy pickings at the once vast Marange diamond fields have dwindled in recent history. Output is down 75% in the last 5 years. Plus, nickel prices have strengthened over the past 5 months as a result of growth prospects in demand for electric vehicles, EVs. Last week, there was a rally to a 5-month high of $13,350 per ton on the London Metal Exchange, largely consequent to the Mariana Dam collapse in Brazil, entangling Vale, Brazil's largest nickel producer. Now, post the immediate effects of the dam collapse, nickel has foregone price session gains for it to settle at $12,385 on Tuesday. Why should Zimbabweans care? Nickel is in the top 3 of Zimbabwe's largest forex earners, raking in just under $1 billion in 2018. Now, to add a little bit of some background, nickel's continued outperformance relative to other metals such as copper is testament that it hasn't given up on its electric vehicles' dreams. Nickel prices have surged, driven by a constant drip of nickel-positive news in the international media space with regards to prospects of EVs. Nickel usage in lithium-ion batteries accounted for just 4% of global demand in 2018, but demand from EV batteries, according to experts, is set to grow by between 30 to 40% per year, making it the fastest growing battery raw material. The story took a heavy knock towards the end of last year when China's Tsingshan Group, a nickel powerhouse in Indonesia, said it planned to build a plant to produce 50,000 tons of nickel per year. Of course, questions have been asked if Tsingshan can deliver on such ambitious target anytime soon. As of now, Chinese investors seem a lot more skeptical of the EV bullish narrative for nickel than their Western counterparts. According to Reuters, Amazon and General Motors are in talks to invest in Tesla rival Rivian concerning a deal that would value the US electrical pickup truck manufacturer at between $1 to $2 billion. As such, experts say that electric vehicle demand is expected to double the nickel price as soon as 2022. Back to Zimbabwe. It seems that government does not have a concrete estimate of the quantity of Zimbabwe's nickel reserves due to lack of funding to conduct proper explorations. According to a mineral potential report published by the Ministry of Mines and Minerals Development, the geology of Zimbabwe is highly favorable for nickel occurrences, with more than 30 deposits having been discovered to date. What we do know for now is that the Great Dike, which stretches for over 500 kilometers from northeast to southwest of Zimbabwe, is characterized by nickel sulfide, which include a variety of comatite and mafic intrusion-hosted deposits rich in nickel. ASA, Bendurus Nickel Corporation, is Zimbabwe's largest nickel producer, currently producing 6,000 tons of nickel annually, with a smelter that is set to enhance their value. They have a smelter project that has been on hold for some time, being flagged at 83% completion. The smelter is set to add value by moving the company up the value chain, but the project is currently on hold because when they budgeted for the smelter, they'd anticipated nickel price projections that could make the smelter profitable and sensible for them to install. The desirable price for the nickel giant would be anything north of 18,500 per ton, but this has proved difficult in recent times as demand for the metal has gone up, but research and development has kept the price subdued. The projections that BNC had made did have the EV demand aspect in scope, which then becomes worrying for them as they see prices are still far from their projected levels. But then again, there is room for the smelter to be finished, especially considering they did mention that one of the major drawbacks to completion was the price of power. If that price comes off significantly, then you might see a different story turn out. At the same time, in 2018, controlling company ASA Resources sold off a 73% stake to an undisclosed UK-based company. Nonetheless, speculation has it that the third party is JSE and LSE listed Pan-African Resources. Well, demand for nickel is still on the optimistic path as motor vehicle companies such as GM and Ford have committed to the production of electric vehicles. Well, that's it for tonight. Later on to join us for a conversation is Anesu with Daily Dose.
Well, thank you very much, Eben, for that insightful knowledge there about the markets in Zimbabwe. But as of today, the stock market did perform in a very positive way. It did come back from about a 3-day slide, coming up 1.6% on the all-share index, and the industrial index coming up 1.62% for it to settle at 510.02 points. Well, it was mostly due to heavy caps, which are Econet and Cassava, which are pretty much the two largest counters on the stock market. These guys did come up 2.25% and 7.37% for both of them to settle at 148.55 and 145.7 points respectively. So with these two coming up because of a little bit of scrap stock purchases and sales, the market did go up in a positive direction, with the ZEC top 10 going up 2.03%. Okay. So with that having been said, we do notice that among our risers and fallers, we have Cassava and Econet among the risers, inclusive of Citco International Limited. Well, the main reasons, as I've always mentioned, as at the beginning of the year, that people are more likely going for the hedging in terms of companies that are more firm in their earnings and have a good likelihood of them actually earning foreign currency, which explains Citco International Limited going up 14.29% for it to settle at 200 cents. Delta, Padenga, and Old Mutual, yes, they did recede today, but then their margins of loss for the day were not as huge as the other three top 10 counters that went up. But then, just of note, we'll notice that on a week-on-week basis, the stock market is pretty weak, as it has settled for about negative 3.2% on the all-share index,
right,
as well as the industrial index coming off 3.25 on a week-on-week basis. Top 10, as we have already mentioned, that the top 10 index is pretty much doing a lot of the movements for the market right now, has come off 4.01% on a week-on-week basis. 0.66% positively for the minings index, mainly because Bendura Nickel is the weightier of the three counters that are remaining on the minings index. Just to give you a little bit of more update on how the demand has been on the stock market, for the past 12 sessions, it has been receding, and today it only landed about 1.9 million shares traded on the stock market today.
Well, thank you, Anesu, and thank you, Zimbabwe, for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From Anesu and I, thank you and good evening.